So let's look at the year-to-date profits, just trading the wheel, a new stock that I added to my wheel since the last video. I'll also answer a bunch of questions that I get about the spreadsheet that I use to track all of my wheel trades, as well as looking back at the last video. I'll go through the comment section. There was a couple good questions. Maybe I can answer those if we have a few minutes. Before we get into that, guys, this video is sponsored by me, myself. The full guide and journal to the wheel strategy, guys. It's on Amazon. Great reviews. I will leave a link down in the description for that below. You can check it out. It definitely pays for itself. I can almost guarantee it. I would guarantee it, but then I'd get myself into trouble. 70 pages. I'll post maybe the table of contents if you want to check that out. But yeah, sponsored myself today. So here is the wheel portfolio inside Robinhood, guys. I am showing a year-to-date return of 3.77. That is with my wheel profits as well as the profit and loss, the unrealized profit and loss of the stocks that I'm holding as well. I will show you how much profit I've made from just trading the wheel in just a few minutes when we get over to my spreadsheet. But yeah, good for $464. The portfolio is up this year. It got up to a high mid-February, about 13.6. I'll take that, not too bad. But the new stock that I did add is Amazon. As I mentioned in my last video, I am going to start targeting some of the larger FANG stocks to wheel in this portfolio, and I'm pretty much going down the list. I got Google, I added Amazon, you'll see Apple, Tesla, Microsoft, we'll see what happens, and then all the way down to SPY. That's kind of the goal for this year. I'm not going to be adding any capital to this. This portfolio is strictly going to grow according to my wheel profits and the premiums that I collect from trading the wheel. If you have no idea what the wheel is, guys, welcome to the channel first and foremost. I have tons of playlists, including full breakdowns. You don't have to buy the book to learn it. You can get it scattered amongst. This just makes it really, really organized, something to hold, something to jot down, something just to have in a good order. But you can find all this stuff inside my playlist. If you don't know what a covered call is or a cash secure put, I'm not going to break down exactly what the wheel is in this video. I assume most of my subscribers know what the wheel is. But Amazon is the stock that I added. I have a cash secure put. I have been wheeling it now for almost a month. I've been rolling it and rolling it and rolling it and bettering my position. Today, it did dive down to 92. It's been around that 92, 93, which is why I've had to roll it over and over again, but it did climb back up. It got around 96. I'll show you exactly where I'm at, but I'm not too worried. I love owning it at 97. 92 doesn't suck either. That is a $500 difference on 100 shares. So we'll continue to try and roll it out and down if we can, and I'll show you. Today is Thursday, so I had to make all of my rolls today out to next week's expiration, which is 3/17. Oh, St. Patrick's Day. Top of the morning to ya. Yeah, all those things. I'm Irish too. Whatever. I don't think it's an Irish holiday. I think St. Patrick's Day is whatever. But now we have those two rolls. I did roll Google and Amazon. This is where I'm keeping it in Robinhood. Why do I trade Robinhood? Because I don't hate Robinhood, and because the fees to open and close options is 0. So it saves me a lot of money in commissions and fees. Not to mention the user interface on Robinhood is pretty freaking awesome. Now, could something happen with Robinhood? Yeah, maybe. There's 12 grand in there. It's not that big of a deal, guys. This is a hobby for me. All right, so that's where it is. If you want easy interface, easy to roll, easy to open, easy to close, here's Robinhood. You could check out a link down in the description if you want to try it out if you've never tried Robinhood before. Here is the spreadsheet before we get to some questions and comments. You guys have seen the videos, guys. I had a negative 834. You're starting, you're like, this guy's a freaking jabroni. I hate this guy. Yeah, get down in the comments, tell me. But this, as the real viewers know, was a couple of roll positions that I had to do with Google. And I have not made a video on that Google debacle, but you guys know what I was going through. So I did make a separate spreadsheet. What essentially happened was I made a call and then Google shot up. Let's go back to Robinhood and I will show you exactly what Google did. I made a covered call and then it shot straight up. All right. And I was at a huge loss, but I had to roll it. And then it came back down to glory and I was able to close almost right at the bottom. And here's what that looked like. It was a covered call. I started at $92 and that started on 118. Okay. So we have to think about the time frame in which I did that. I rolled it up to 93. I rolled it up to 95. I rolled it up to 95. This one was just out. I couldn't roll it up. I then was able to roll it up to 97. I rolled it back down to 96. I held these for an average of 4.5 days. So this is the just the Google debacle of, I think, 2 videos ago, but I closed it all said and done on 221. So just over a month, I made $309 from this position, 3.36% on my basis. I'll talk about the basis because that is a question I've been getting about my spreadsheet. But all the while Google was going up to 112, 115, how high did it really go? It got all the way up to 107. All right, it got all the way up to 107, down from 86. So it went from 86 on the 5th all the way up to 107 less than a month later, and then back down. So it was doing a roller coaster over the last 3 months, guys. And this is why the wheel strategy is awesome. Over the last 3 months, Google is down 1.81%, okay? 1.81%. On just this trade in 1 month's time, I made 3.36. So this is how we use the wheel strategy to hedge against volatility up and down in the market, okay? This is also why I believe covered calls is a bearish strategy. I'm not going to argue with you in the comments. If you want to get in the Discord and have an intelligent conversation about why the covered call is a hedge against a down market and it is a bearish strategy, hop in the Discord, first link down below, and we can have that intelligent conversation. But over the last 3 months, Google down almost 2%. I'm up 3.36%. That's just on this one trade because as we see when we go back to the spreadsheet, after I closed that particular roll, I opened another one right away on 227. I collected $49. I had to roll that here for 109. So we went from 92. I rolled it up and out. So I rolled it up $2 back up to 94. All right, so I got 110. So that was a $1 in premium, but a $2 change in strike. So remember, when we're rolling, and that's really what the last video was about, and I'm going to answer questions from that video, but sometimes we roll up, sometimes we roll out, sometimes we do both. Sometimes we roll to increase premium, sometimes we roll to better our strike. This is a situation where I closed for 109, I opened for 110, so I got $1 extra in premium, not that big of a deal, but I was able to roll it out from $92 all the way up to $94, bettering my capital gain situation by $200. And then once again, I was able to close that option. All right, I closed it for 220 for 200 and then opened it up for 233. So that first one only got me $1. This one got me 33 plus another 100. So we can see just from 227 to today, which is really 2 weeks, I've upped the strike by $3. So on assignment, that's a $300 win for me. And I've also collected 49 plus 1 is 50 plus 33 is another $88. So this is really looking, if I were to get assigned right now, it's looking to be about a $400 play. I'm not going to get it assigned. As you know, I'm going to keep rolling it, but right now in the green on that, about $400. Here is the Amazon roll. Let's see where the Amazon started. Amazon started with a cash secure put at a $98 strike. All right, I was open that for 56. I had to close it for 228. So we look, here's the first roll. I closed for 228, but I got 267. So that was a net 40. Then I bought to close for 401, but opened again for 445. There's another 40 in premium, and I lowered my basis. There's a $100 winning capital gains. I then closed it for 350, and then I opened for 395. And if you've been watching, go back. I just had to change my spreadsheet because that didn't make any sense. I just want to show you that I'm not manipulating numbers. Here is that roll. We can see I bought to close for 350 and then I opened it for 395. Sometimes I'm just quick and lazy on my spreadsheet, but I didn't want you to think that I'm just altering numbers here. And like I said, if you want to hop in the Discord and call BS on any of these rolls or anything like that, feel free to do so. But close for 350, so there's another $45 in profit. And then I closed it for 443, and then I opened it for 505, which I think is like another $60. So this has been a really, really good roll for me, So this started with a $56 win right there. Then I closed it for 228, opened it for 267, another 40. So now we're at roughly 90. Then I closed it for 401, I got another 40, so now I'm at about a 130. Close it for 350, got another 40, so I'm at essentially about 150 right now for that. And I've changed my strike from 98 down to 97. It's still currently at 97, and as we saw, Amazon is trading right now for about $93, $92.17. So that's something that I will just tackle next week. So that has me in February. I was up 8%, a little over $1,000. Pretty much makes up for that, up 2%. I'll show you exactly how much I got. Right now, I'm up $624. So I can come over here. If I type in 624 for March, that gives me a total of 874. So I'm up total for the year, 7.21. And as I mentioned, I like to stay around 2% when I'm trading the wheel. So I will definitely take that, up 4.91 already for the month. That does not suck at all. Let's just talk quickly about the comments that I get about this spreadsheet, and then I'll go to the video from last week and I'll answer some of those questions that really came up in the comment section. Guys, the date, very self-explanatory. And I will mention, guys, if you are one of my Discord members inside Patreon, you have access to this. You can edit it as well as all my other spreadsheets. That's the first link down in the description below. So you can either copy this if you know what Google Sheets is, or you can just come in and grab my template. The date, the ticker, I think cash secure, put, covered call, and roll, that's self-explanatory. The strike price, very self-explanatory. When it expires, very self-explanatory. DTE is days to expiration. This just gives me an idea. Like I said, if I pop in here at the beginning of the day when I start my trading, I can go in and look, all right, 8 days, I don't really need to worry about that. When I start to get down to 3, 2 days, 1 day, that's what I'm going to be looking to roll. The open is either a sell to open for the wheel. It's only going to be sell to open. If this was just your options spreadsheet, right, we could open by buying or we could open by selling. In the wheel strategy, we are selling calls and selling puts. So the open, when we sell, we receive premium. So all of these opens are going to be positive numbers, okay? And the closes are going to be the buy to close, whether that's a cash secure put or whether that's a covered call. I know off the top of my head, I remember seeing a comment, what do I put in the close column if I am assigned on the option? If you are assigned on the option, it expired worthless, okay, and the buyer exercised that option, I put it in a 0 and you get the full net credit. And you can see that right here. This Google cash secure put, this is when I received those Google shares at a basis of 92, okay? That expired, so I just put a close of 0. I didn't buy to close it for anything. And that will also go into the basis column. The basis column is going, and call is collateral. So for a cash secure put at a $92 strike, I needed $9,200 of collateral to place that option. So I put $9,200 in here. All right. If it is a covered call and I already own the shares, this is my basis. How much money did it cost me to purchase those 100 shares? And this was a covered call or a cash secure put that got assigned. So my basis was $2,550. So in that column, the basis is for covered calls. How much did I pay for the 100 shares? The call is the collateral, meaning how much collateral did I need to put up for the cash secure puts. So if you see sell put, $29 strike price, I needed $2,900 of collateral to make that trade. Here's another cash secure put, Intel, $28.50. I needed $28.50 in collateral. So then when I find my ROI here, we could see it's just K19 minus M19. So it's the net premium divided by the collateral. Simple as that. I don't do annual returns anymore. Just returns on these particular options. And you can see some of them are great, some of them are less. You really got to zoom out and look at the entire month. The longer you have, the more data you have, the better, right? If we go back to 2022, I have all of these trades for the whole year, and I'm able to zoom out in just this one calendar and look at that. 4,165 for anybody that missed last year. I'll link that video somewhere. You can go check out last year. But always try and zoom out. So we have a minus 679 for January. If that was my first month trading, I'd be like, wow, the wheel sucks. Brad Finn sucks. His book sucks. I hate everybody. But if you zoom out and you say, oh, wow, you bounce back, you have an 8% month after that. You have a 4.9% month after that. Things start to look a little bit better when you zoom out. Here is the comment section from the last wheel video I did, guys. You must learn this skill if you want to trade the wheel strategy. That was all about rolling. If you have questions, leave them down in the comments below, and then I'll do the same thing moving forward. I will scroll a little bit. I know there's 201 comments. I'm not gonna do 201 because I see I'm already at like 20 something minutes for this video, but I will look down and see if I have any meaningful questions, and I'll stop and I'll answer those questions. Let me just scroll. I will comment C Knight here. I thought rolling was only if you're going to get your goose cooked. Like if you sold a put option and it looks like you're going to be holding at assignment. This video is a paradigm shift for me. Much appreciated. Yep, better than dividends for sure. The wheel is a little bit better dividends. Thank you so much. I used to think the same thing. I always used to think that you got to assignment and that was the end of the day. And it wasn't until I started rolling for the last 3 years now on a regular basis that I really, like I said, got to zoom out and look at the data. There's people that always comment that I'm an idiot inside the comments. That's fine. Like, my data speaks for itself. But yeah, no, rolling is a really, really good option. And out of all the plays that I made this year, that Google was the only one that got assigned. And that was like, I think I had something going on or I was sick or something happened where I wasn't able to get to my computer for a couple of days. But other than that, every single one pretty much is getting rolled. And it's not that I don't want to be assigned. It's that it's just easier to roll. My goal is to continue to make premium and I can adjust my strike. So for example, like somebody asked, if you keep rolling, you're not going to get the benefits of capital gains. I showed with that Google roll that I have, if I keep rolling the strike price up, my basis is still always going to be $92. But if I roll to 93, 94, 95, back down to 93, 95, 96, back down to 93, 96, 97, I'm going to continue to raise my strike as I roll with the share price as it continues to grow. And if anything, I'm able to raise the strike price a little bit more consistency with growth, and I don't have to worry about assignment when it goes way up for whatever reason, and then assignment when it goes way back down. I get to follow the yo-yo up the stairs by adjusting my strike a little bit either up or, as we're seeing with Amazon, a little bit down. So I do get the benefits of rolling and capital gains as well. J Don said, nice video, rolling, Brad. I was just wondering what your thoughts are on rolling the puts in the wheel. Like I showed you guys, I'm doing the same exact thing. And right now, Amazon's at $92. My strike is up there around 97. My goal is to continue to roll down and out as much as I can, probably next Wednesday or Thursday, or hope that Amazon has a freakishly weird day and it shoots up past my strike, right? It goes out of the money, it goes worthless, and boom, I could buy to close it for a really, really small price, or I could continue to roll it at a different strike. Stanley said, just curious why people don't talk about trying to get your cost basis down to zero on a stock. Then the strategy becomes a gold mine. I mean, that's, I guess, the goal. It's like implied. We don't need to talk about that. I've only done it once. I did it with Vuzi. I traded the wheel for so long with it that I got its basis down to zero. It's also really hard to do. Vuzi was like a $4 stock, so I didn't need to get that much premium to get my basis down to zero when I eventually ended my career with Vuzi. But yeah, like, I guess it would take me a pretty long time to get $9 grand worth of Google. But I also tend not to look at adjusted cost basis. I did it for a little bit, but it just got really, really confusing doing adjusted cost basis, things like that. So I really just stopped doing it, and I just stick with just the regular basis. SD Andrew, thanks for your videos. Couldn't you have just allowed Google to get called out on your first covered call since your cost basis was lower? Yeah, I could have, but then as we saw, now I would have been covered call, I would have got the cash, and then what would I have done a week later when it dove back down into the 90s? Like, I just don't want to get assigned, and I like to be in control of the situation. It's kind of like a fighter. I don't want to go to the judge's scorecard. I don't want to get assigned because the day after assignment, I don't know what's going to happen. But I do know that if I roll, the odds of me getting assigned early by the buyer, especially with a non-dividend paying stock, is almost zero unless something ridiculous happens. So yeah, that's kind of the reason, Andrew. If you have a follow-up, let me know. But I don't really like to get assigned. Chuck got your book ordered, The Wheel Strategy. Love all your videos. Thanks a lot, Chuck. I hope you do like the book. You should have gotten it by now. This was 3 weeks ago. Leave in the comments for this video if you check it out. What do you think of the book so far? Let other people know. And if you have read the book, guys, let people know that it's a good book. I'm telling you, for the money, it's a really, really good book. Question, if one, say, has 1,000 shares of stock, enough for 10 contracts, do you keep them all together? Is there any benefit to doing groups? That's really up to you. I've seen people in the Discord that had maybe not 1,000 shares, but definitely a lot of shares, and they'll stagger strike prices, or they'll stagger expirations so that one's maybe going on. So they essentially roll different stocks. I've seen people do all different things with it, but I personally, and that's what I commented, I don't have 1,000 shares of anything, so I haven't really thought too much about it. Hudson Investment Group said year to date 3,500 just premium with the total portfolio on the positive. Couldn't have done it without your assistance. I didn't do anything, man. Good for you. I'm super stoked for you. Great job. Great doing the work. Robert says, I got the book. Loving it. Awesome. Thank you so much, Robert. Vibe, as I mentioned earlier in the video, you can get the spreadsheet. It's in the first link down in the description below if you are one of my Discord members, and you could talk with 250 people now that are trading the wheel just like you might want to. Aritra, I hope I said your name right. What are your criteria? You're going to have to go back and look at some of those videos. It's also, I go through this book. There is a whole chapter on stock criteria for trading the wheel. You can look on page 50. I go through exactly what my criteria is for trading the wheel stock. Stock Market HQ makes a really good point, which I will mention just because it is worth mentioning. For all of you with the small accounts and haven't figured out, it's almost impossible to roll penny stocks. The reason is liquidity, guys. If you've read the book, if you know about the wheel, rolling is all about liquidity, right? Just because you place an order doesn't mean it's going to get filled. So you want a stock with high liquidity. What that means is a lot of shares of it get traded every single day. That's why I'm doing it with these high popular stocks, or stocks with a lower share price that are pretty popular. But yeah, if it has a low liquidity, low float, penny stocks, it's going to be very, very hard to not only roll, but just close those options. Try and avoid them. Bostonelli, so am I doing the wheel strategy wrong? First off, your strategy is, just because it's different than mine doesn't mean it's wrong. You could do it. I have a feeling that's where this is going to go. I've been messing with Tesla because I like the premium. I will say, as a conservative investor, I don't trade any wheel stocks because of the premium, although I have mentioned that Tesla would be pretty fun if I did want to mess around. I sell cash secure puts at 0.3 delta range and haven't been assigned. I just do it weekly. If I get assigned, yeah, great. Go for it. Like I said, some people like to get assigned. Some people, that's a little bit more passive. You don't have to do as much work as monitoring it and getting ready to roll it. So if you're happy with that 0.3 delta, which is a very conservative delta, if you get assigned, you get assigned. If not, good, you do it again. Some people like that. This is not my style. Mohammed, the account size I recommend is 1,259,322,619 on the dot. But if you don't have that, use whatever amount of money is good for you. In investing, I usually say, regardless of what the investing strategy is, if you have to ask that question, you're not ready to invest. Jeff, I have Google A shares. I don't think there's much different. I've always just had the A shares. Yeah, John, ton of work. Definitely not worth it. Don't do it, bud. Don't watch my videos. Just go quick. It's definitely, yeah, I promise you, definitely not worth it. Too much collateral for too little profit. Yeah, I know that. 3.5% I made on Google when the stock was down 2%. What an idiot I am. Damn it. And we'll end with Peter's question here. What was the original delta on the puts that you made for? I do not use delta anymore when I'm trading the wheel. The deltas are kind of like if you're beginning and you kind of just want to get your feet wet, because you can use them as conservative or non-conservative strike prices. For my puts, it's all about fair value for me. I have a video on how I find the fair value of a stock. Just type in Brad Finn, fair value of a stock. So there was no delta, or I didn't look at it when I made my first Google put. I can go back in the Discord because I do post all of my trades inside Discord. I'll try and go back maybe, and I'll answer that if you are in the Discord. But for me, puts are all about fair market value. That's why I said earlier in this video, I like Amazon at 87, so the fact that it's 92, I'm still kind of good and not that worried. And for me, calls is all about cost basis. Whatever my basis is, I will write calls above it. As long as it's above it, I don't care what the delta is at this point in my wheel career, guys. I'll catch you guys on the next video. Check out the book down if you want to learn. You want to hold it, 70 pages, journal, full guide on the wheel, how I'm making money over the last couple years. And you can hop in the Discord for a cup of coffee a month if you'd like. That link is the first link down in the description below. Thanks so much, and enjoy the rest of your month.